Afternoon. Just making sure my camera is working. God, I look weird. Wasn't working this morning. Afternoon, Mark. How are we doing? Momo, Leshy, Elevated Trading Hub with his Darwin X. He's got a Darwin. Joaquin, get yourself into a couple of prop firms as well. Short-term gain. I went to sleep yesterday and got stopped out. Okay, that will happen. Afternoon, Dennis. David, good afternoon. Hello, Lee the Great. Hello, David the Great. Thank you very much for the $10. Much appreciated. I like it when a big yellow banner appears on my screen. It's always good. Afternoon, Marco, Paolo, konnichiwa, shifu. I shouldn't say things in foreign languages I don't understand because I could have said anything then. I kind of know what konnichiwa means, but I don't know about shifu. Afternoon, Peter. How are we doing? Right. So I'm going to quickly whiz through what's gone on today. So today basically is kind of end of week recap, if you like. We covered end of week recap really this morning in the live room. But I'm going to do it again, basically, just have a look at what's gone on today and gone on this week. Main, obviously, news we've had today is the PPI figures, which all came out as negatives. We had positive GDP this morning for the pound. So if we look at Euro US and Pound US, obviously Pound had a lovely big rally. If we look at the Euro US dollar, we've had a drop on those. It was kind of a drop and a pop really on the PPI numbers. So nothing particularly exciting on PPI. That came out an hour ago. So it's kind of this candle here was a bit of a pop against the US dollar. So US dollar dropping again on negative numbers. Just opened my pen. It's like Hunt the pen. I've got this pen that I use to draw on the screen. Every time you open it, it opens in a different place. So you have to hunt it down. I've got a huge 42-inch monitor, so I have to actually look around for it. Shifu means grandmaster, teacher in Chinese. Yeah. Not sure if that's a dig at being old there. But anyway, which is always nice to be a Shifu. I quite like being a Shifu. Sounds like a dog. So yeah, US dollar, if we look at all of those, Aussie dollar, US dollar, we've had a little bit of a rally, meaning the US dollar's dropped. So it's not massive though. Obviously nothing is going to really affect the US dollar from a news perspective at the moment because it's nothing to do with the tariff. So not a great deal of movement on that. 3 o'clock in 30 minutes, we've got University of Michigan coming out. University of Michigan quite often moves the market quite hard. It's the very last news event of the week. Friday, they tend to like to balance books, get profit in, get some trades closed, get things over the line, commissions, targets, all that sort of stuff. So we do find there's quite often a lot of volatility spiking on a Friday, but not necessarily continuous movement. But obviously, that's got nothing to do with anything at the moment because it's all about Trump. So today's news, obviously, yesterday we had the next batch of tariffs going back towards China, and then China have come back today. Let's just go back with more tariffs. So China have now come back with 125 to America after America went that way with 145 yesterday. So now we're back that way. It's Trump's turn. He's awake. So in the next hour or so, be prepared for 100. And I think what did I guess at this morning? If anybody was in the live room this morning, did I say 175? I think I guessed at. I reckon he's going to go back with 175. He's picking numbers out of the air, but he's going to go out with something, isn't he? So we're waiting to see what the next tariffs are. As soon as the next tariffs come out, stock market, US dollar, gold, everything against the Swiss franc, everything against the yen. Yeah. So buy the Swiss franc, buy the yen, buy gold, sell the stocks, sell the dollar. That's basically it. Every time there's a noise coming out of Trump's mouth, that's what you do. I've already made my money today. So ORB this morning, beautiful day yesterday, got all the loss from the previous day back. We had some nice breaks this morning. I got stopped out. I could have made a lot more than that this morning, but I decided to let it run because we had a good day yesterday, up 3K on the week. So I thought I'd just let it run. Unfortunately, on the FTSE, so we had a failed attempt at a short, and then the second attempt worked. I got stopped out on the second half at break even, and then it pushed up literally into the 5-minute high, triggered me into an order and came back down again, which is unfortunate. So it's only a 300 loss. It's not the end of the world. But the DAC was a double clean break short, clean break short. So straight down to target. I took a little bit off there because I was worried about a bounce here. Took a second bit off on the bounce there. It actually blew through and then retraced. So I got out on the trailer there. So profitable day so far. Stock at the open, 5-minute range, complete indecision candle. So we got a spinning top at the open. So indecision, bulls and bears in equilibrium. There is no advantage as yet. Good volume coming in. You can see how jittery it is today. There's a lot of volume coming into the market today. So there's a good chance we'll get a break today. But the danger of any day where you have news coming out at 3 o'clock is the market sits around for 30 minutes and waits for that news event to see whether or not the dollar is going to devalue or increase, depending on whether you're buying stocks. You're looking to enter purchases, you want to buy them as cheap as possible. So if the dollar's going to come down on UOM figures, you wait and buy your stocks later. If the dollar's going to rally, you buy your stocks straight away. So they'll wait for those numbers to come out of Michigan, and then obviously they'll dump whatever into the market and it will start to drive. But we trade the 30-minute range anyway. So as long as the ranges aren't too tight, which they are at the moment, as you can see, ranges are too tight in the minute. As long as we've got a decent 30-minute range, we'll take a trade of those today. Let's just have a quick look at the Dow. Yeah, same thing. So all markets exactly the same today. Load of volume, no direction. So that's the news we've got coming out this afternoon. This morning's other news. Kashkari's been saying a lot this morning. The Fed are getting ready for a fight with Trump. It's going to kick off next week, I think. If they drag on, it will take more time to reach levels. So basically, the Fed are pissed off with Trump because he's screwing with the economy. Their job is to keep the economy stable and to grow it. If somebody keeps changing whether the dollar is valuable or unvaluable, or the stock market is valuable or unvaluable every 30 minutes, you cannot do your job. There's no way the Fed at the moment, and it's the hardest job on the planet, running the Fed, but there's no way they can predict anything to do with inflation, unemployment, interest rates, or anything with GDP with what the hell's going on at the moment. So there's a bit of a butting of heads with Powell and Trump, and I think it's probably going to kick off because Trump will just go, get out. I'll get someone else in that can do the job better. Whether he can or not, he'll find a way, won't he? No breakthroughs from Witkoff's visit to the Kremlin. So Russia, Ukraine, just rumbling on. Other news this morning, I think that's pretty much it. Oh yeah, US-China tariff hikes are extremely concerning, obviously. To you it is. To us, we don't care. We get 10%. US, you're dead. I would expect inflation to be well over 3% this year due to the tariffs. So this is something I covered earlier on in the week. There's a very high probability of this rate drop that we've seen down to 4.5. That is obviously been caused because inflation is starting to come down. Therefore, we can start to drop interest rates in line with inflation. When inflation gets to 2%, we continue to drop it until it starts to tick up, and then we freeze. That's how economics works. Inflation is going up. Your iPhones in the US now are double the price they were last week. That's called inflation, but it's not just inflation, it's hyperinflation. Hyperinflation means hyper interest rate hikes. Think 17%, not 4%. Yeah, this is what happens in these instances. This is why it's got to stop. But if it gets to the point where the Fed think an immediate swift cut of interest rates back down to 0, which is what we had at COVID. If we go back to, there we go. Oh, there you go. It's on the chart. So this was interest rates. Then we had COVID and we went, oh, screw it. Let's all zero it. Yeah, they've got that. And what that will do is stimulate massive borrowing and massive business growth. But can you drop that to stimulate business growth when everything being imported into you that you use to manufacture is 75%? I don't know. That's what I'm guessing at today. 175% higher than it was last week. Doesn't matter if they drop 4% off your borrowing rate, your prices have gone up 175%. That equation does not work. So that is highly unlikely to happen. The most probable thing is you might get 2 interest rate cuts this year, maybe down to 4% if you're lucky. And that's today. Yeah, this afternoon, different story. So it's impossible to tell what is going on at the moment with anything. And as you can see from the news, there's red, red, red. It's red all the time. US warned China against retaliating in private talk. So I'm just waiting for it to come in. Market's open, Trump's up. He's probably sitting there at the moment going, what should we do? 165, 175? 160. Press the button, tell CNN, and that'll be it. So then it's back to China. And China this weekend will have to come back with 185. I don't know. This is all that happens. Costs in America just go up and up and up and up. And everyone else sits there and goes, I'll carry on dealing with China at 10% or whatever it is. You know, it's just nuts, isn't it? But anyway, so that's where you are, unfortunately. But that is the truth of the matter at the minute. 10-minute ORBs still too tight today. Not far off. So if we can get a little bit of a push out on the 15, I'll be able to take one of those. That's no, yeah, it's not too far. 440 on an 580. So yeah, it's tight. Not going to trade this 5, 10 or 15 range today. There is no movement. There's a lot of volume, but no direction. So this is why the ORB does what it does and the way that it does it. This is not a good market condition for breakouts. Yeah. So we'll wait for the 30-minute range to go in. Hopefully within the next 15 minutes before the news hits, we'll have pushed a little bit further, which will open these ranges up to a more tradable size. And then we'll take a break of those in either direction. Right now, we ain't going nowhere. Right, so that's that news. So we're waiting for 3 o'clock for the market to open. Afternoon, Chris. FX-wise today, as you can see, really little movement today so far. I'm not surprised because the market is really just sitting around on most things at the moment, waiting for the next announcement. So, you know, it's like announcement, what's next, announcement, what's next, announcement, what's next, announcement, what's next. Didn't get any announcements yesterday, or we did actually, but a bit later on in the day. And it's just retaliatory announcements for that announcement. So, you know, we're sitting waiting for the next megaphone hit. Swiss franc sitting around today as well. Complete A-shaped recovery on the Swiss franc. So obviously they pulled all the money out of the Swiss franc when the news came about the tariff pauses for 90 days. Then the market turned around and went, hang on a minute, but they've still put all the tariffs on China. They export everything to everybody in the world. Oh yeah, hasn't really had any effect, has it? Because China's the most important one. They're the ones that need no tariffs because they manufacture everything. So the entire world is going to be hit by the costs they incur being passed on to everybody else, which causes inflation worldwide and recession. So this is still a massive problem. It's an undoing of this, but actually it's not much of an undoing of anything because we've still got a trade war. Trade wars between countries that you are not in still affect you. So market's still very, very jittery. Fear and greed index still down at 9, 8. So, you know, this anything below 10 is collapse, basically. We don't get down to 10 very often. It's very, you know, it's major things. Something's got to be pretty massive to get down to this level. We're not getting out of it. We were down at 4. We've come up because Trump announced a 90-day rest, but that doesn't make you, oh, okay, no worries, we'll buy the dollar, we'll buy the stock market. You're still scared to do anything because any second he can change his mind. So the market is going to remain in fear, which means you keep selling stocks. So breaks to the upside are going to be very difficult to make work at the moment. So breaks to the downside, like we had this morning on the DAX and the FTSE, are going to be much more successful. FTSE, they're going to work better. They're going to be faster. But as you can see, we didn't really go anywhere on the FTSE today. DAX, we're definitely still down. This is because motor stocks are still suppressed. We've still got those big tariffs on motor stocks. So, and that's what most of the DAX is. Not most of the DAX, but a lot of the DAX. Excuse me. So, yeah, we'll see what happens. So 15-minute ranges are in, too tight still. So we have got a 30-minute range to trade today. So that's good. So that's just shy. That's just shy. And that is just shy. So we are definitely got 30-minute ranges on all three today. So we'll take 30-minute ORBs, which is your initial TPO, time price opportunity candle. So if a break is going to happen, it's going to be on that 30-minute. So the ideal for me would be for that to be whatever candle this is here in the 20-minute to be the highest session so far, us to pull back inside. Yeah, and then on the 30-minute candle, we're going to get all those ranges put in, and that's exactly when the news hits. So try and get a jump on the news, basically, and see if we can get some kind of momentum off of that. Aussie dollar's rallying against the yen. We've got some yen sell-off happening by the looks of things, or is this Aussie dollar strength? This is Aussie dollar strength. So commodity markets on the move. Oil will be trying to push. So there's weakness coming into the yen. Again, this is probably just settling before Michigan. A lot of weakness coming into the end. The Swiss franc's probably weakening as well. So probably bullish price action against the Swissy. Not too much. More yen. So something's going on with the yen. Yeah, Fed may not cut with persistent inflation. That's... Stay watching me. It's exactly what I just said. China has considered allowing Western firms to act as market makers for its ETF sector. Interesting. So what I said on Wednesday, or was it this morning? I can never remember, but I think it was Wednesday. I said, if this continues in the way that it is continuing, the US has got this danger of losing the world's currency status. And the rest of us are going to turn around, because what they've done is basically screw everybody on the planet economically. We're all going to turn around now and go, right, well, you want to be a little bubble, you be a little bubble. So we need new trade partners. We're not going to trade with you anymore. We're going to look that way. Yeah. So China is considering letting Western firms act as market makers for its ETFs. So let's get all our banks over there and we will start using the yuan. I said weeks and weeks ago, there's a high probability in the next sort of 5 years or so, we will be trading things against the yuan. This could be what kicks that off and says, right, okay, well, there's no point in trading the US dollar anymore. It's dead. So what's moving at the moment? That stuff. So we start trading that. You trade what moves, basically. If you need to make money, something has to move from A to B. If something is stagnant or just declining, obviously you know what to do with it. You just sell it. But if something isn't now what's moving the most because it's not the world's currency, it's not going to be used to price everything in, you start looking elsewhere. So this could be the start of a shift away from the dollar, which will be new for everybody, won't it? Did you change the ADR multiple on the NAS? I'm running on 10. So I'm on 10 at the moment. I covered it in the live room this morning. Basically, if you look at the movement we've had now, so that is 1, 2, 3, which is what I adjusted to 3 ADR to make sure that I was looking at what the volatility is at the moment in the last few days. So there's your 4 and your 5. Yeah, that's 6. So that is 6 ADR, which takes into account all the volatility since the gap down. Yeah. And then you've got 4 days worth of normal. This is normal price action on indices, yeah, or on anything, basically. This is the volatile price action. So adjusting back to ADR 10 now, you're taking into account a normal day and extreme volatility days. So that's basically what I'm using at the moment. But if you're using ADR 3, you're going to have, that's 4. Using ADR 3, you're going to have different readings, different numbers. But it won't be massively out. So on the dashboard here, look. So this is ADR, I've done it again. This is ADR 10 on here. So the ADR dashboard is running ADR 10. And the indicator is running ADR 3. So the indicator on the chart I've got currently running on an ADR 3. So you can see the difference between the two. So if we look at the Aussie New Zealand, Aussie New Zealand ADR 10 has done 150%. Aussie New Zealand ADR 3 has done 125%. So it's not that far out. When we looked at it this morning in the live room, we were here. So we looked at this. This was an ADR hit this morning at 100% of ADR here on ADR 10, and ADR 3 is there. So that's the differential at the moment. It's not a lot between the two. So it doesn't make a massive difference, but it will obviously give you a different reading. But which one's the right one to use? I don't know. Depends what happens today, doesn't it? You might look at it today and go, I should have been on ADR 3 because I've got a nice clean break on the 15-minute. Or if you're on ADR 10, you'd be going, oh, that whipsawed on the 15-minute. I'm glad I didn't use ADR 3. One of them will be better to use than the other. No one on the planet can tell you which until the market is opened. Yeah. So if you adjust these ADR numbers, you'll get a slightly different reading here. So your ADR 3 might be, I don't know, 10,500 or something as a max, and the minimum might be 4750, instead of 5885, which means that you will have taken that long. Yeah, you'll be long all 3 of them. Well done. You're in profit on 3 trades at the moment. I'm not. You know, it's all the same, isn't it? It either goes or it doesn't. If you're on it, you profit. If you're not, you don't. Trade is a trade. Whether it's right or wrong to use ADR 3, ADR 5, ADR 6 or ADR 10 at the moment is anybody's guess. I can't advise you on it because I've never traded through something this large with Trump. I thought I had 4 years ago. This is nothing compared to 4 years ago. 4 years ago, it was volatile, but it wasn't this volatile. Yeah. We've had the largest movement in the stock markets in history. This week. It's just, and did you hear him bragging about it? It's like the markets were in free fall. He was asked what he thought about the markets collapsing. He was like, I don't know what you're talking about. We've had the largest day in history, 9.5% increase on the S&P. Yeah, but you dumped it by 6% a day for 3 days. You can't brag about 9% retracement on a 12% dump. It's still down, mate. Talk about spin it. Bloody hell. Anyway, we'll see. So 30-minute is about to go in. 5, 10, 15, 20, 25. No, it's not. We've got one more candle. So the next 5-minute candle will be in, and then we'll see what we'll get breaks-wise on that. So yeah, ADRs today. Obviously, the weeklies, we looked at this morning. Again, the weeklies and the monthlies, useless to you at the minute. The monthlies are just no point in paying any attention to any of this month. Weeklies, this week, irrelevant. Yeah, this is the movement we've had this week. Obviously, everything's moved 225% or more of ADR across the board, the vast majority of stuff. Next week, obviously, we'll see. If it all calms down next week and we get back to a bit more normalization, then weekly reversals potentially will be an option. But ADRs at the moment, if I switch this from an ADR 10 to an ADR 3, you'll see the difference in the alerts. Yeah, so we got 175 on the Euro US, 150 on Aussie New Zealand. This is going to ping like crazy because there's all of those hits it's processing. Yeah, so all the difference between ADR 3 and ADR 10 does, these are still extended beyond average daily range, just not quite as much. Yeah, so see what I mean by there not being a massive difference at the moment. ADR is ADR. It's beyond range, basically. So I'll leave it on 3 for the minute because that's what the indicator's on. But yeah, take your pick. What's pound New Zealand up at now? 173 on a 181. Euro US dollars up at 290 ADR now. That's big. You can see the volatility. It looks crazy, doesn't it? This is normal price action. Look at the size of these days, and then look at what we're getting now. You know, it's absolutely off the charts. Insider trading? No. You're not accusing Mr. Trump of insider trading after he dumped the market, said on his social media, now is a good time to buy, and then pumped the market, and then stood in the White House with billionaires saying, this guy made 900 million, this guy made 600 million. Sorry, Donald, did you just admit to insider trading live on television? Hello? Is that the Fed? He's dead, isn't he? He's admitted it. Didn't make it up, could you? But like I said this morning, if you're going to put a criminal in charge of your country, do not expect him to suddenly go straight. Doesn't work that way, does it? You did it, not us. Okay, so this is the 30-minute range. Sorry if you're Trump supporters. You're on the wrong channel. But yeah, insider trading, very highly likely. That White House clip was crazy. I know. I had to check it because there's so much out there at the moment. I've seen Elon Musk, Donald Trump, and Vladimir Putin working in a shoe factory this morning. So you do have to check what you see now, because those three, as far as I know, weren't making shoes in Adidas this morning. But I had to verify it. Anyway, so you've got to verify these videos, yeah. But I mean, it's been on national television. It's so blatant. But the trouble with insider trading is it is incredibly hard to prove. So the way that they normally do it is they look at trader track record. So if you are in Congress, for example, and you never traded before, or maybe you've had a couple of investments and you've bought a few stocks here and there over the last 2 years, and you suddenly put 25 million long on the stock market in one day, it ain't rocket science, is it? That's insider trading. You knew you needed to do that because someone had told you. So it's not a difficult thing to prove if there is abnormal behavior. If you have people that regularly have portfolios of investment, they will naturally have been adjusting them during turbulent times. When they put it all back the other way after doing a retracement, that could well be normal, couldn't it? But the timing, coincidental? Very hard to prove insider trading. You need evidence. So, but I mean, it's obvious to me anyway, because he did it last time as well. It's not new. People haven't gone back to his previous term when he first came out and dumped the markets and then pumped them back up again. This is not different. This is bigger, admittedly, but it's not new. Okay, we've got 50 seconds until the news. So we'll just watch these. If you've got any FX pairs you want to look at, let me know. Analysis is obviously very much with a pinch of salt at the moment because it all depends what Trump and Z say. G. Sorry, that was my broker. How much money have you made? I'll watch. I'll look at that in a minute. I just got a job offer on my phone. How weird is that? Okay, there we go. So S&P has frozen. Wow. Okay, so 30-minute ranges are in. So I'm going to take 30-minute ORBs. Gap down. So I'm assuming the numbers are good for Michigan. Be very surprised if they are, but that indicates good numbers. So no, 50.8. I was going to say, if consumer sentiment comes out as being positive now, they've got a really positive bunch of people. Stocks are down. Trade wars are happening. We've got a war we can't finish. How do you think it's going? Oh, amazing. Yeah, I'd be very surprised if that came out as a positive number. So US dollar, not a lot. Very small reaction to that. Big spreads going in. Brokers manipulating spread like crazy at the moment. Okay, so yeah, there's very little reaction to UOM. So we'll see if we can get a perfect position. We're bang in the middle of the 30-minute range, so we'll just take whatever direction the market decides to take off in, if it takes off. It's one of those days today where I'm up on the day, I'm up on the week. I don't really want to jeopardize it with just trying to push the market at the minute. So if I can get something that looks fairly clean and it's going, I will probably close out early today with small profits, just to control risk, basically, because it's been a good week. It's always a good week, but it's been a good week from a ORB perspective. So what I don't want to do is end the week on a negative. There's a danger of going into rotation today. So this is your initial time price opportunity handle, if you like. So the first 30 minutes of trading in the futures market. Sorry, we put a TPO in. And the market, if it's going to go into rotation, will often test the high and then reject it, and then they will test the low and reject it. But what quite often happens is that initial candlestick gets beaten out to the upside and then fails, and then downside and then fails. So you end up with a price action pattern that becomes an outside bar, and then you tend to just chop around for the day, and that's basically a rotation day. So there is the danger of going into rotation, which is why I'm keeping a bit of an eye on this, because it's either going to be rotation or we are going to break. Yeah, and go. So it's this is high of day, and we're just going to break short, which is what it indicates is what it's going to try and do at the moment. But it could well test that. There is no demand for shorts. Then it will try and test highs. If there's no demand for highs and there's no price action up here, then it will just sit there for the rest of the day and we're done. In which case you get 2 stop outs there, 2 stop outs there, 2 stop outs there. So it's a little bit more dangerous if the market doesn't move. But at the moment, we're going absolutely nowhere. So US dollar is weakening. Euro US going up. Strong pound move coming in as well. So European benefiting. It's very little movement anywhere. This is a bit underwhelming. I was expecting a little bit more today. Maybe, as I say, they're waiting for Trump to speak. He's got to retaliate back to this Chinese tariff. So maybe the market is just sitting there. You know, we're not going to do anything until we've heard from Trump. In which case, if he doesn't speak today, we're just going to go sideways, up and down. In which case, you want to be playing range highs and lows. A little bit like what's happened today. So look at selling the highs, buying the lows. If we're going to stay in rotation, you're not going to do much more than that today. I'm going to give it till the hour. If we are still inside bar on that initial 30 minutes, an hour in, I'm dump. I'm done. I just read Trump and dump at the same time. I'm Trump and done at the same time, which gives me dump. Trump is the trigger. Yeah. So keep your eyes peeled on financial juice. I mean, you'll see the move before you hear it. So there's your Michigan figures coming in. The forward path of inflation and the settling of trade policy is unclear. Again, we know all of this. Musalim is speaking at the moment. Uncertainty is high. Fed's policy is well positioned. Downside risk to growth and unemployment have increased. Notable headwind for the labour market. Closely monitoring whether a rise in near-term inflation expectations seeps into longer-term ones. All the same stuff. That's interesting. Chinese airline has delayed delivery of some Boeing 787s. Yeah, this is the knock-on effects you're going to have. Yeah, so all these new planes, that affects everybody everywhere. You know, if they suddenly go, well, we're not going to buy all the new Boeing jets. Boeing has now got an excess of jets it can't get rid of. They've got to go somewhere. Where are you going to sell them? You know, it suddenly slows everything down. There's an economic slowdown everywhere because these two are fighting. The biggest economies on the planet fighting affects every other economy. We're all doomed. Okay, so we've got potential 3-bar reversal going in for longs at the minute. So if we get a bull close here, would indicate we might go for a break to the upside, but breaks to the upside are going to struggle at the minute, I think. You can see how rangy we are today. Yeah, I mean, this is the Globex session, high and low. So we're in a symmetrical triangle contraction at the moment. So we are waiting for a move. We haven't had one today at all. Looks like it's trying to break long. So again, contraction. Can't contract forever. It will break. But there's going to be a lot of selling pressure here. We've had selling pressure there all day. We've had buying pressure there all day. And as soon as you get through that selling pressure, if you get through that selling pressure, you're rushing straight into a load of sellers. Yeah, so there's a hell of a lot of upside resistance to try and get through. If it breaks that, though, we'll be off, potentially. Not going anywhere, though, is it? We're stuck. Anybody got any other pairs they want to look at? Anything else they want to discuss? This is also a Q&A session, basically. Fridays I've kind of put on the calendar as Q&A sessions, morning and afternoon. So if there's anything you want to talk about to do with trading in general, analysis of pairs, whatever, happy to discuss, but just waiting to see if anything moves. Pound New Zealand. Well, pound's been going up against the New Zealand dollar because the New Zealand dollar's been going down against everything. Actually, it's come back down again, isn't it? Oh, yes, that's one of the ones that's retraced. So, yeah, we're back. All the volatility of the last couple of weeks, we're back to square one, aren't we? Look at that rejection this morning. Actually, look at that rejection in the last hour, sorry. So, God, look at that. Wicks. Look at the wicks on that. Talk about no direction. But look at that lovely long tail we've just had going there. Sellers tried to make a break to the downside, firmly rejected. If the next round of tariffs comes in, that could drop the commodities market further. New Zealand commodity exporter, which means New Zealand will weaken, pound will rally. But we are back in previous support here. So, you know, so there you go, weekly low. If you want an example of support resistance, limit order triggers, perfect. But, you know, as I said, I've said a couple of times this week, support and resistance is a technical level based on normalized price action. This is far from normal price action. So it does appear that support resistance is holding through all of this. So that is a great looking long. You've just had a 15-minute reversal alert, or you're just about to get one. Look, literally this candle. So there's your last batch of buyers before the new low was formed. So we are just about to close above that high in the next 4 minutes. If we close above that high in the next 4 minutes, because at the minute that's what we're selling, and it looks like they're selling it again. But if you get that reversal alert in, that could trigger a rally. But yeah, nice price action on this. Lovely market structure. Lots of opportunities to get in and out easily. But so yeah, don't know at the moment on this. It's looking like a lovely long 5 minute. You've probably had one. Yeah, there's your 5 minute reversal alert already gone in. So any retest of that propulsion gap or a deep pullback into that propulsion gap, potentially good looking long opportunities. If it does pull back into here, it means you won't get a 15-minute reversal alert yet, because if it pulls back in the next 5 minutes into those propulsion gaps, which are in here, that isn't going to be an alert. But if we do close up here, so if this closes up here in the next 2.5 minutes, which it looks like it probably will, you're going to get a 15-minute reversal alert. You've had the 5-minute reversal alert, so those would be your retests. So you've got two options if you want to play it long today with a stop loss. Take one on the 15-minute reversal alert straight away, and then if you need to, average into a second position down here when you see some bullish price action coming in. Yeah, get in with a second entry there, stop under those lows, and if it does rally today, you're off. Be a nice little trade to finish the week off. You've got loads and loads and loads of room. There's ADR, look. If we're going to continue to put in the same volume, average daily range is absolutely miles away. So you've got loads of room to the upside. Euro odd. No breaks. I'll give it another couple of candles. This is looking whippy. It's just further contraction though, so the more it contracts, the more explosive the move will be when it happens. So euro odd, we've done a 50% retracement on the leg, and the buyers have stepped back in here. So you're meeting upside resistance at the minute. So right where we are now, it could go either way, couldn't it? That is the way that before all of this happened, that is the way that I would expect the euro to go, because Lagarde has come out and said they're going to continuously drop interest rates. There was easily another 3 interest rate drops potentially on the cards this year. Now, we don't know. The ECB have come out and said the May meeting will be a hold with high certainty at the moment. Obviously, this can change any day, but at the moment, the ECB are going to hold rates, which makes the euro bullish. The Australians, no idea. They're being hammered by the commodity drop. So it's very difficult to predict any directional bias with anything at the minute, because it changes literally on a daily basis. Next Tuesday, they were going to slap a whacking great tariff on the US. They're still considering it. But they have said they're likely to pause now because of Trump pausing. So as long as Trump stays paused, the Europeans will stay paused. If he puts tariffs on, they will put tariffs straight back on again. It's going nowhere but up if that happens, I think, the euro. But very, very difficult to say. You can see, obviously, what it's doing at the moment. But this is not caused by a strong euro. This was caused by the defense spending increase and the fact that Trump said, we're not going to help you out in Ukraine anymore. You got to deal with your own problems. So defense spending had to increase. Bond purchases had to happen. So the futures market purchased bonds. We flagged and we broke on the tariffs. So all of this movement here is all caused by Trump. It can all be uncaused by Trump as well. Yeah, so short-term market structure is bearish right now. Yeah, so you've had a break back down to the downside and you've put in a lower high. So push back down into that propulsion gap would give you a leg down. So high, low, lower high, lower low. However, we've got a low, a high. This could be your higher low or a higher high. Right now, it's looking pretty bullish. Lots of wicks to the downside. Look at the size of these wicks to the downside we've got. Yeah, sellers very, very hard to take control of the market at the minute because everything is flowing out of stocks. When you flow everything out of stocks, you have to put it somewhere else. Yeah, so you're going to put it into the countries that are likely to survive this the best. At the moment, Australia and New Zealand commodity markets not going to do well. So this against the Australian dollar specifically and against the New Zealand dollar, they'll be the same chart pretty much. Look at the wicks to the downside. Yeah, there's a lot more buyers in this market than there is sellers at the moment on euro. So I'd be more bullish than bearish. So again, on that respect, drop down lower time frames. There you go. I was just going to say, wait for bull reversal alerts. Literally just had one there. So ignore any bearish reversal alerts and take all bullish reversal alerts. Go with the flow. As I said this morning, at the minute, mean reversion is very, very risky because it happens so fast. Yeah. You won't be able to get onto the moves. By the time you've seen the reversion to the mean, you've missed it. So getting breakouts or taking reversal alerts in direction of long-term trend is by far the best way to trade, and hold it. Hold them. That's what I'm doing at the moment. I'm literally trading breakouts and holding those breakouts. Yeah, there's one there. Look, breakout to the downside. Beautiful. Breakout to the upside. Yeah, breakout to the upside. Hold them because they will. This is the path of least resistance at the minute. The markets are looking to try and make money and generate revenue as easily as possible. At the moment, you have to assume this is going to continue, the trade war. If the trade war continues, the markets will continue in the direction they're going in, or they will stagnate. And if they stagnate, at some point, they will continue in the way they're going. But your downside risk is so much less if you're just following trend at the minute. When it all normalizes, obviously we'll be back to a mean reversion market, which is where we spend 80% of our time. So trend traders will suddenly go, hey, trend trading is the thing to do. You watch YouTube over the next 6 weeks, right? There were people out there advertising courses on trend trading masterclasses, anything to do with trend trading, all this sort of stuff. Yeah, because they've just made a load of money trend trading. They're like, oh, I've cracked it. This is all you've got to do. Yeah, for the last 2 weeks. But in 3 weeks' time, when the market goes back to normal, they're all going to die. The market spends 80% of its time in mean reversion. So, a la this rubbish. Yeah, this is dead today. What I'm going to do, I think, we got 10 minutes. I'm going to reduce risk. I don't want to be in everything today because there's a danger of just giving everything back. Starting to drop now, look. I think what I'm going to do is I'm coming out of the S&P. I'm not going to take the S&P today just to reduce risk. I may well regret it. It might just go. But I'm going to trade the Dow and the NAS because these two are very correlated today. Look, virtually identical. This is very similar except there's different stocks in here. So if we suddenly get a sector hit, a different sector hit, we could get a completely different movement on this to the NASDAQ. So I'm just going to reduce risk by taking that off the table, which means there's less correlation between the two, which means that if I'm going to get whipsawed, I'm only going to get whipsawed on one, not two. So I'm just going to stay with the one instrument at the moment on the NAS, and I'll take the Dow because the Dow is a lot further away from that 30-minute. The NAS moves a lot faster. So this will be an indicator of whether or not this is probably likely to follow suit today. So we're going to take that. If it stopped out, I'll probably cancel the opposite pending because I don't really want to try longs today. So short NASDAQ. And we'll see where we go. It's low risk. So S&P is about to trigger as well. Afternoon, Ismet. So the danger is obviously we're selling directly into support here, but we've tried to go long and it's failed. So obviously we're in a bear market at the moment, clearly. So if that attempt for the bears, the bulls to hold that low fails, we're going to flush straight down into this area down here. So you've got a fairly decent run to the downside, and I'm going to adjust risk actually. Where's my take profits? Where's my partial clotheslines gone? Oh. Sorry, I've just had a light bulb moment. No, I haven't. They're still there. That's because they got trades open. Why's my NASDAQ take profit lines gone? I'm going to have to draw those back in. I want it to be sell, don't I? Already used? What's it doing all the way down there? Oh, you idiot. I adjusted this morning because I wanted to keep it tight. I put in 3 instead of 0.3. That should be 0.3, not 3 ADR. I want it as a third of an ADR, not 3 ADR. There you go. I thought I thought I'd found a bug. It's me. I'm the bug. There we go. Right. So I can get rid of that line there now. So I'm going to put the partials at this low. So if we can get a break just down into test these lows. So there's 2 areas I can see that we're going to test today here is the Globex low and the Globex high, obviously your first daily resistance and supports. Yesterday's low is the second, and then the origin of the move yesterday will be where there's potential buyers sitting, waiting to add on to the move they started yesterday, or rather this is more likely a profit take, which means it's not really a buy, it's actually the sellers getting out of their positions. So that would be my third target to the downside. So it looks like it's all pulling back up inside and we're holding support today anyway. So I don't think we're going to make much money out of this today. It's going to be one of those days. It's a choppy day. We're back inside range. So keep risk tight today. Still haven't triggered the Dow. So the Dow, look at that. Look at that for a miss. That's my entry. Look at that. Missed me by literally a pip. If there'd have been anything more than like virtually no spread on that, that would have been triggered short already. So yeah, still wait and see. Might trigger short. If that goes short, that means the Nasdaq's dropping anyway, so that's all good. So yeah, downside target. I'm just going to keep that NAS target within reach today. In fact, I might actually go even closer than that and stick it up here just to get some cash banked. We've got a big order just come in. Traders lighten bets on Fed rate cuts. See 3 policy rate reductions in 2025, beginning in June. Mexico's president, that's that spike is on the president news. Issues the US has not complied with. There will be an immediate delivery of water to Texas farmers. Rainy seasons can help Mexico. Okay, I don't see how that's really moving the market, but we've got a bit of a spike in there. Afternoon, Ed. Welcome to the group. Afternoon, Church. Church. So we're struggling here. Okay, we've got 3 minutes until the initial balance is in. The initial balance is the first hour of trading. And the first hour of trading at the moment on the Dow is within the initial TPO. So there's absolutely no interest at the moment in directional bias. We quite often get a kick on the hour because it's an hour in. So we quite often get a flush of orders coming in on the hour. So we'll just wait and see if that happens. If that doesn't happen, I think what I'm going to do today is I'm going to cancel off the long on the Dow and the NAS, because if that does stop out, it's going to cost 388. If that stops out, that's going to cost 388. I'm up 626 on the day, so those together will put me in roughly $100 loss, which is a break even pretty much. So I don't want to risk getting chopped out on that and that sort of price action today. So it's either going or it's not to the downside. I've got downside targets in place. The Dow downside targets I'm just going to adjust as well. Small targets today, not that small. In fact, I might as well leave it pretty much where it was, to be honest. That's roughly 1R. So I'm going to leave it where it is. Is that 1.5R I had that set to? 3, 2R. Okay, so that's 2R. I'm going to leave it roughly where it was. It's either going or it's not in it. So by the time we get down to here, the trailing stop will have kicked in anyway. So I'm going to start reducing risk. And these are 3/4 closes. So we'll see where we go. But that's pretty much all I got for today. Not really going anywhere. There's not a lot we can do with it, is there? So Monday, obviously, we'll see what happened. If you've got positions on, get as flat as you can at the weekends at the moment, because obviously they go triggered on the Dow now, short. If there's no announcement from Trump today, obviously there can be announcements from him over the weekend, and President Xi can also say stuff over the weekend as well. So we could find a massive gap situation on Monday on stocks and on FX. So try and get yourself as flat as you can for the weekend. So just take off as much risk as possible, because if it gaps in the wrong direction, you're going to wish you had. If it gaps in the right direction, yeah, it's a lucky one. But if it, at the minute, it could gap in either direction. Every single day this week, we have had huge price action, on the dollar and on the stock market. So every single day we've had huge movement, beyond the norm, which is this, So imagine having 2 days worth of that on Monday, If we get one of those followed by another one of those in the same direction on Monday, and we close here, you'll be opening down here, If you're holding, why you would be holding along, I don't know. Probably you'd only be holding a short. But if Trump comes out and goes, do you know what, China? Really sorry. Let's scrap everything and have a chat. We're going to be back up here. So you've got a 50-50 shot of being in absolute agony on Monday. So get flat on everything you can. If you're position trading, you haven't got a choice. If you're in positions, you need to hold the positions over the weekend. But anything else you've got, there's just no point really in trying to hold them. It could go your way. It could go completely the opposite way. And if it goes the opposite way, you're going to hurt. Pulling back, look. Ever thought of trading Bitcoin? No. Why would I want to trade at the weekend? Do you not have days off? I don't trade things I don't understand. I don't trade things that haven't got a fundamental bias, and I don't trade at weekends because trading's done in the week. So, banks and institutions aren't trading crypto. So, what moves crypto at the weekend? I don't know, but it's not the people that drive this, and this is readable. So, crypto will give you a good gauge, though. If the crypto markets are up over the weekend, you can be pretty sure you're going to gap up on stock indices, because crypto markets are a mirror image of the stock indexes. Go and look at Bitcoin at the moment, and then go and look at the S&P 500. It's the same thing. So it's a good way of gauging what's going to happen on Monday. It doesn't help you because obviously you can't trade it. Not you can trade crypto, but you can't trade the indices, but you'll know where you're going to be on Monday. So if you have got, let's say, for example, you're holding along on the Dow over the weekend and Bitcoin collapses over the weekend, you're going to be crying on Monday morning. If it pops over the weekend and you're holding long, you'll be happy on Monday morning. But either way, it's not a good way to manage risk, is it? So this is going to be a double stop out. So this is what I was fearing, basically. So it's just going to wipe out the day's profit, unfortunately, which is not the end of the world. Still up 2.5K on the week. So that'll do. But we'll see. We're not out yet. But it's not looking like it's wanting to break short. Unless this is just a pullback. This is potentially just a pullback short, look. So new low, lower high, lower low. See where we go. All right, I'll leave it there. I'll be back on Monday morning. So Monday, we're back to normally 2 streams a week. I won't be here next Friday. Next Friday is Good Friday in the UK. I think it's Good Friday everywhere, isn't it? Look at next week's calendar. Yeah, so we're not here on Friday. Is it not holiday in the US next Friday? You don't get that off. Oh well, we do. So not in Friday next week. So next week we've got streams on Monday morning, afternoon, and Wednesday morning, afternoon. That's it. So there's only 4 streams next week on Monday and on Wednesday. So back Monday morning. What's coming up next week? CAD CPI, pound CPI, CAD rate. Be interesting to see what they do with that. And we've got the euro rate. Okay, so there we go. So that is still the forecast at the moment, but that's a long way away, isn't it? That's 4 days away. That could change a lot. So at the moment, 90-day freeze, that should be exactly as it is. But, you know, he could sneeze this afternoon and we'll be going in a different direction. So we're up to 11 double digits. 12. This is the live version, by the way, on the CNN website. So we're actually up to 12 now. So there is potential for a long break today. Interesting. Do I want to chance a long break, though? I'm going to watch it. Right. Did you say Monday is a holiday in the UK? No, Friday and Monday after. So next week is Easter. So next week, Friday. Next Friday is a bank holiday in the UK, and next Monday after is a bank holiday in the UK as well. So there won't be any streams next Friday or the Monday after. Yeah. So it's Easter weekend. So next Friday not here, the Monday after not here. So it's holiday time. Not that I'm going anywhere, but stopped out on the Dow. Not stopped out on the Dow. Look at that. Ooh. That could be the luckiest trade of the day. Look. No, now I'm going to get stopped out because I said I was lucky. Go on. I don't know why I'm willing it to lose me $400, but hey. Oh, look, I'm surviving. Okay, so that's, you know, I always say 50% of trading is luck. You just witnessed it. So if that goes bare now, that is me surviving by a pip. Not even a pip. In fact, that was pretty much price. So it's micro pipette there I just survived by. You witnessed that live. So when people say, well, I got stopped out, you didn't get stopped out. I don't know. Brokers are different. If you're on Globex and you've got the same settings as me, you're in. Unless you've got a different broker manager and he went spread. But yeah, survived that result. So still an opportunity to make money today. But in the next 5 minutes, I might be gone. Anyway, I'll shut up now. I'll go. Have a good weekend. I'll see you on Monday. Anything you need, let me know. I'll be in Discord or in Telegram if you need me in Telegram. Other than that, have a good one. And I'll see you next week. Hope you survive the weekend. Trading-wise, I mean. See you on Monday.